Hey, let's discuss tomorrow's Nifty's expiry. The market has no shapes, right? It's behaving like, it's buy on dips and sell on rise concepts, and insider candles, this and that. So many things is there. So this is while monthly is checking, it's still in bearish mode, right? Based on the sell on rise. So the market either has not reached this level or not reached this level still in the May. So we are already in the mid of May. So while the month candles is not so much clear, and then we'll go for the week. So there is a fresh buy for this week compared to the last week. So from the lows of last week, the market is retraced, right? It's going up. So how much, we don't know. So wait and watch. We have to wait and watch. It may retrace up to the level of 23,400 also. So to these levels, right? Yeah, 23,000. 24,000 levels also it can again retest. So what my view is, tomorrow, since the expiry is also their weekly expiry, so we'll go for a 1 hour basis. So when we check on 1 hour basis, 1 day basis, this is still inside candles, right? Insider candles for this Murboju, right? Bearish Murboju. So these are all the insider candles, right? So then suppose if the market holds 23,700 tomorrow, and it forms lower lows with some sideways, then we can confidently sell below 23,300 or 23. It's already battered down the premiums here, so we have to be very careful in tomorrow. Okay, so once the market we confirm that there is 23,700 holding, then we can go for a fresh selling of the puts nearer, or else we have to wait for the dip. So when it dips, so we can go for a again selling the puts, right? So if the market opens flat and we have trading in this zone, right? Trading in this zone is very nightmare. So if the market taking is higher highs, higher lows, higher highs, higher highs. Sorry, the market takes lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, then the market may be bearish to some extent, and so we have to look out for the call options to sell. If the market gap downs and doesn't hold this area, then only it is too much bearish, right? So that also, then also we have to wait for a confirmation whether it retrace and then take up or it go up. Then after going down, then it's a confirmation that it's a huge break. Otherwise it's also breakout here and then stays here, or it breaks out here and stays here to some extent, up to this extent also, 24,000 also. That's what. So when the market is in between this area, and the market is in this area, we have to trade in the zones, like wait for the breakout here, or wait for the breakout here, or else if the market opens here nearby and doesn't break out and it's going down, then we will go for a selling the call options beyond some 24,000 up above, so or 24,300 400 above. So that is the best way. And then when the market going down with higher lows, lower lows, lower highs, then it's a bearish with slow movement, right? Then we'll go with 24,400 to 24,300, 24,300 to 24,200, 24,300 to 24,100, 24,000, like that, keep on selling calls. So anyhow, we look at the options data and check what is going on, right? Of stocks. This is another account I have. If you see, today it is 23,000 made profit from this crude oil, and then 11,000 from this Nifty selling OTM options. So when we go with let's check what is happening with the option chain, right? See, when we go with the change in options, change in OA, see, calls are going out, right? There's a calls are wind up. So calls winding up. So puts have been added. So 23,700 puts gone out. Maybe they have booked the profits. So 23,800 booked the profits, book profits when the market is going up. Then but there is a fresh add up also, right? Fresh add up, and calls have been added at 24,000. So 24,000 is the tower, big tower, and 23,800 also. But there is 23,600 straddles also there. So we have 23,400 puts. So anyhow, puts from the different levels, it is heavy. Maybe these puts have been not winded up because there will be premium by the time in the market, when the market open, because the market reached 23,300. After that, market went 20,300 to 24,700, 23,700 went. So these puts have been not wind up. So right, they stays in there. But these puts have been already wind up, because maybe in the opening, it may open down and go up or something. So but still the 23,600, some people are calls are there, and 23,650 calls also there. So when we check overall, 1,400 versus 2,000 puts, so it suggests that the market is slightly bearish, right? So max pain, that means I am saying that most of the traders expecting there's a bullish. So 23,649 is a spot, and the maximum pain is at 23,600. Max pain is 23,600. That means look out for either way, right? Down or up, down or up. So then PCR is almost 1.35, slightly bullish. That's why even you see today also, check the points, Nifty is 6.45. So you're not even 50 points, maybe tomorrow 6 points, that means 23,700. That's why the market is 23,600 and 23,700 call options there. Maybe 50 points tomorrow, like 23,650 also, or 23,700 also. Slightly bullish, okay? Whenever, even though when it is dip, then it is better to go for a slight bullish. So that is the conclusion we can have based on the option chain and open interest, right? So when we check 23,681 is the premium side, and 33 is the call side premium, and so 23,700, almost 78 in the calls and 726 in the puts. So if the market goes to 1,000, there's a huge decay in the put options when the market reaches to 23,700 also. There's a good opportunity, but we have to be careful tomorrow trade. Thank you.